Well, the company in focus in Tata Power from the power sector. Remember, the entire power sector has seen a complete re-rating, with Tata Power 2 clearly outperforming in terms of the stock price performance. Whole host of expectations was, being built in as far as the market was concerned in the power space, especially Tata Power, and the company has managed to deliver on all fronts a handsome beat across most of the consensus estimates as far as Tata Power was concerned. Now, when you're talking about the actual numbers, when you're talking about revenues jumping up almost over 54%, coming in close to the 9,970 crore mark, EBITDA coming in close to the 2,300 crore mark, margins coming in at 23.3%, while profitability jumping up almost 90%, coming in close to the 390 crore mark. Now, one of the key things that the market was waiting for, anticipating quite closely, was the fact that the company had not yet decided how exactly and when exactly to proceed with strategic unlocking or value unlocking as far as its renewable assets portfolio was concerned. Now, this is something that the market is waiting for keenly. At this point of time, the company has not yet decided. In fact, has set itself an 18-month timeline in terms of how exactly to proceed with this particular announcements. Expectations were there as far as an IPO announcement was concerned. Remember, earlier there was expectations of an InvIT coming in, but also an IPO is something that the management is looking at. At this point of time, no options have been ruled out, and it will be interesting to see if and when the renewable portfolio announcement does come in, how exactly the market actually takes it. Now, when you're talking about the key highlights, strong performance from the Mundra coal JV, monetization plan for its renewable assets is still in the work, looking at the best structure, and the company will not be merging the Tata Power Solar power business with the standalone entity. The merger of CGPL with the standalone entity is in the final stages of hearing, and that is something that analysts view as a key positive. Solar EPC business has been impacted by higher module prices, and company has partnered with Tata Projects for greenfield projects as far as the power transmission space is concerned. Our CLSA has maintained a buy stance on the stock and has repriced its and says that the company's repricing of debt, reduction of debt, and net long coal position that Tata Power carries actually has driven a solid Q1. They've gone ahead and lifted their EPS estimates by 3 to 6% to factor in deleveraging as well as lower rates. The company has said, CLSA has said that they reiterate their buy on given deleveraging and the scale up of the renewable energy portfolio. On the other hand, JP Morgan has maintained an overweight stance on the stock, target of almost 155p a share. They say Q1 FY22 was a beat. Strategic objectives of the ESG is something that the market was looking at, and the company has delivered. Growth as well as deleveraging remain in sight. They've maintained an estimated CAGR of 35% as far as the EPS estimates are concerned from FY21 to FY24.